Most people are buying Palantir at the market like suckers. They're guessing where the bottom is. Today, I'm going to show you how to turn the tables. I'm not just buying Palantir. I'm getting paid a signing bonus to wait for the exact price that I want. If the stock doesn't go down and hit my price, I don't buy the shares, but I still keep the cash. If it does dip down, I get the stock at a massive discount. And in this video, I'm going to show you the exact math to use so you never have to chase a trade again. Now, yesterday we talked about deleting indicators, all that noise. You don't need it. And we talked about becoming the casino. Today, we're going to put that into practice, and I'm going to walk through it step by step on my platform, using Palantir as an example, but it works for any ticker. When you sell a put, you're basically telling the market, I'm okay buying these shares at X price if the price drops, and only if it drops. Now, because you're taking on that obligation, the market pays you instantly. The cash gets dropped into your account right away. But here's the problem, and here's where most traders get stuck. Which strike price do you use? What do I want to pay per share? How do I decide that? If you pick a price too close to where the stock is, you might get a sign too early. If you pick a strike too far away, you won't make that much money. You need the secret, so watch this video to get it. You want to find that optimal price where the probability is high that you get paid and not have to buy shares, and the paycheck you get is worth the risk. Now, historically, I always used a bunch of messy spreadsheets to calculate this on the fly, and it was a pain in the neck. Then I went to the marketplace to find similar tools that I was using, and I couldn't find them. So guess what I did? I created them. And I've been using them for myself. But now I created a public-facing version so you can use them too. I'm going to show you in this video exactly how to use it. That way, instead of doing mental gymnastics in my head or looking at complex spreadsheets and typing data in manually, I have an easy-to-use application that does it instantaneously for me. Now, before we jump right in and check it out, please do me a favor. Subscribe to this channel. We're at 5,400 subscribers, and I'm trying to hit 10,000. Subscribers and likes and comments help other people just like you find this content. Okay, let's jump right in. All right, so we're in my Thinkorswim platform and we're looking at Palantir. And we're always going to pull up just a 1-year chart to get a sense of where the stock's been trading this past year. Now, this is the visual floor right here that I was talking about in yesterday's video. We can see recently it's hit a low of about $126. And so we're going to think of that as like the floor of the stock. That's kind of where our support is. Now, if we pull up the trade tab, here's our options chain. And it gives us all the different expiration dates. And if we click into Friday as an example, we can see all the strikes down the middle. And our put pricing is on the right-hand side. But as I mentioned previously, what strike price should we choose? Well, here's where the magic happens. I have spent so much time creating the calculators that I use on a regular basis and get them ready for public release because I know these tools are helpful for me and I know that they can be helpful for you. We can use this rate of return calculator and we can do it in one of a couple ways. I can type in Palantir here and I can look at the expiration date of Friday, for example. And then I can manually enter the strike price and the price that that contract is going for right now. So, for example, I can enter the $128 strike, and that was 118 bid and 122 ask. So I'll just enter the mid price here of 1.2. And then when I calculate, it gives me a results section over here. It tells me that this particular contract has 5 days until expiration. I'm getting paid $120 per contract based on the price that we entered of 1.2. The capital we need to make the trade is $12,800 based on the strike price of $128. That's $128 times 100 shares if we have to buy the shares. And it automatically calculates the percent return that we get paid, as well as annualizing it out. And that's super cool. But guess what? It gets even better because this is still kind of flunky in the sense that you have to manually enter all this data. I can also hop over to the live data tab and I can type Palantir here and fetch the data. Now, I want to choose which expiration date. I always prefer weekly contracts, so we're going to start with March 6th, which is this coming Friday. And then I have risk levels to choose from: conservative, mid-range, or aggressive. We're going to use a mid-range for demonstration purposes. And a mid-range risk would include deltas between approximately 16 and 30. That's the percent likelihood that the stock is going to drop below the strike price before the contract expires. Now, when I click calculate, it's going to automatically calculate and give me that mid-range contract. So as we can see here, the application is giving me the strike price of 130. It's assuming a premium based on the bid price of 153. This is a 23 delta. We're holding the contract for 5 days. We're making $153, putting up $13,000 in capital, and it automatically calculates our annualized return here. Well, guess what? What if you wanted to be a little bit more aggressive or a little bit more conservative? You can change your strike price up here. So for example, instead of choosing the 130 contract, we can say, what if I chose the 129 contract? And I could just click this button and it will automatically recalculate our figures. So you can see exactly on the fly what your annualized rate of return is. You can also change the price at which you're paid for the contract. So instead of using the bid price, you can opt to use the mid price or the last price. Now previously in a lot of my videos, I would use a calculator. For example, we can calculate this and just make sure our math is correct. If I'm making $134 on this contract and I'm putting up $12,900, there's our rate of return, 1.038%, which matches our number here. If we're holding it for 5 days, we're going to divide by 5, and then we're going to multiply by 252, which is the number of trading days per year, to get our annualized rate of return. And that gives us our 52.35%. So instead of using it on a calculator, flipping through screens, or using an Excel spreadsheet, the application does it all automatically for you. Super cool. I also have some other calculations inside this app, calculating short calls, averaging down your positions, checking whether you should liquidate a position or wait until it expires, calculating credit spreads, which is always a nightmare to do manually, as well as some other tools like a trade journal and tracking your positions. So stay tuned for the rest of this. So what do you guys think? Can you see how easy it can be to figure out what kind of trade is worth taking? The application does all the math for you. Now I'm just finishing up a few final touches and the app will be released in the next handful of days. Make sure you're subscribed to my free inner circle. That way you'll know as soon as it drops. Anyway, I hope this video helps. If it did, smash the like button, share it with a trader friend who will find it helpful too. And be sure you're subscribed so you don't miss the next video. Cheers for now.